everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of November the 14th, 2016. Now, after a very, very choppy, volatile week, the U.S. election has ended. We have an actual winner here. Whether that's a good thing or a bad thing is going to be left to be seen here. But, the one thing we want to look at is that, democracy has spoken here and Trump was elected. Republicans go to the House and to the Senate. So the markets appear to really like this idea that there'll be no more deadlock in Congress. Things may actually be able to get done now that the Democrats are pushed out of the way and they're not this petty bickering between the two parties. So the people have rejected the Democrat rule. They've rejected Hillary Clinton, and they want to give Trump and the Republicans a try. So I think right now the market is responding very positive to that. Now, we could see some volatility going forward next week. I think we do have some, some protests, which I think they should really think about putting an end to very, very quickly, because that's not really good for anybody. It's not good for the U.S., not for the U.S. economy, and not for any of the U.S. trading partners. So hopefully that is put to bed this week, and we move forward from here. So the election's done. It is what it is, and that's it. So when we look at this, we can see that the U.S. dollar is responding very, very well to this. We had a big sell-off here on this particular bar. We dipped below that Brexit breakout point here very briefly and then very quickly came back up, and that's a good thing. So when I look at the key vantage point level here, 98.07, we've closed at 99.05. The dollar index really trying to make a move here, but what we have to be a little bit cautious of here, we still don't know enough of Trump's policies to know what he is or isn't going to do. And we have significant resistance at this 99 level. We're looking for a clean break of that. Our predicted short, medium, and long-term differences are not even remotely overbought here, guys. There is plenty of room for this to run. The predicted RSI, 71.1. Everything looks quite good there. So it would appear that the dollar is going to remain king for now. But again, we still have that wild card as to, what's going to happen with now that Trump is in power. We have to see what his policies are actually going to be. We have to see if he's going to behave the way he's behaved in the past, or whether he's going to start acting like a president. We don't know this. So it could be still a wild card for the dollar, but right now the dollar is moving higher. We can see our global equity markets also pushing higher, but I want to point out here, guys, that we're not going to see anything really change on the S&P 500 until we break through in my respectful opinion, break free and clear of 2190, get above 2200, stay above 2200. We're going into a rate hike cycle. This does favor the US dollar indisputably. The Republican controlled Congress that favors the U.S. dollar, but it may not necessarily favor the equity markets here. Trump's been very hard on companies like Apple, a few other companies, just to mention one or two. So we'll see. But right now, again, we have this congested resistance on Thursday. After that big sell-off, we rallied right back up again. And this is what I warned in last week's Forex Weekly Outlook, that this is what we could see. That did come to fruition. But surprisingly, I wasn't convinced that Trump would win. I certainly wasn't convinced that the Republicans would take control of the Senate and the House so decisively. When we look at this, will there be more civil unrest? Yes, that would be a negative for the equities. But for now, I don't think that these riots are going to amount to much. The European equity markets also recovering, moving higher, as is the Nikkei. Everything is moving up. So we've had a bit of a down day on Friday, which is normal, on some profit taking. But the equities right now, they look stable. I would not say they're overly bearish, but I would not say they're overly bullish either. I think that after all of the smoke is cleared from this election that seems like it's been going on for forever, we're right back to where we were here, guys. The bottom line, the dollar is actually stronger. The equity markets are back where they are. Now, with oil going for oil next week, if the global outlook and we start to see some actual growth out of the U.S. finally, that somebody, good, bad, or indifferent, is in control of the helm here, that they can steer the U.S. economy and get some growth moving here, then oil could recover. Watch $44 a barrel very closely this week to see if we can hold above this area. We closed at 44.15. We can see that potentially we could have a triple bottom in place here, but this key vantage point level 47.05 still paints a bearish picture. However, we can see that oil is trying to recover. Our medium-term trend to the downside is weakening against the longer-term trend from VantagePoint. This is usually a signal of a potential reversal. So I would look for a reversal this week back up towards this 47.05 area, that basically we start seeing the global demand for a little bit more global demand for oil as some of the economies start to pick up a bit. So, but that's left to be seen. Again, a lot of things could demand is still relatively low for oil, so we could see this fall even further. But whether we get below $42 a barrel or not remains yet to be seen. Now, with gold this past week, we can see that gold absolutely does not like the Trump Republican, the fact that the one party is now the majority, they're in control of everything, because gold senses that there actually is going to be some decisions being made here in the U.S. economy, and there will not be a deadlock, what it's been for the last 8 years under Obama. So gold, not a buyer here of gold whatsoever. We can see that the VantagePoint indicators warned it of before the election even took place, or it's warned us that gold was struggling to make any kind of real gains here. So I don't think gold is going to finish well going into the latter part of 2016 into December, barring any kind of craziness from from Trump, or if he does something or says something that he shouldn't. That's my biggest fear here, is that that could send gold higher again. But for now, clearly money is pouring out of gold very, very quickly. This is having a very negative effect on the euro currency here, guys. We can see the critical level for the euro now comes in at essentially the 109.80 area. Selling into this area to start the week, guys, is a decent play. What I want to point out here is that gold did break through that trend line that you just saw on the gold chart, which suggests that the euro is going to follow lower. The indicators from VantagePoint here, great indicator right here. The medium term crossing over the long term predicted difference days before the election even took place. What a fantastic signal here from VantagePoint, warning us that basically things are going to be okay. All your chicken little liberals of the world basically got it all wrong. The media, the whole lot of them got it wrong, but VantagePoint actually got it right. And they warned us, VantagePoint warned very clearly that money is moving out of the euro into the US dollar, despite this nonsense around this election and everything that came with it. The fact is we still managed to get a nice clean signal on that. I don't think anything's going to change for next week. I think that US Swiss franc is also doing quite well. US Swiss franc here, guys, this one here, I make a recommendation for, been making recommendations for my own direct clients for longs for months and months and months. And right now, the key thing I want to get us above, we want to get above 99.50 and back above parity within the next 2 to 3 weeks here, guys. If we do, then we should be looking potentially for US Swiss franc to move back towards 104, 105, maybe even higher, and it could be set for a very strong 2017. But for now, we want to watch that key vantage point level, buying into the 98.19 level. Still a reasonable play. If we lose 98.19, chances are something is already going wrong in the Trump administration. The market gets spooked. Next thing you know, money comes out of the US dollar, goes into the Swiss franc. We still have to be mindful that that could happen before the inauguration. So be careful of this. That's a warning sign here, guys. But for now, clearly markets are coming back into the Swiss franc. Case in point here, the big level here, the Brexit bottom that I've talked about for what appears to be months and months and months now. You can see that the market came right down to this level here and then bounced out of there. Fantastic buying opportunity on this pair, coming from 95.50 all the way back up to the 99 level, some 400 pips of fantastic trade here, guys. And remember that VantagePoint signal on Euro US was a leading indicator to buy US Swiss franc. Now, as we look at the British pound for next week, the British pound loves it, guys, when the euro sells off. The euro British pound, that is a big pair for me these days. Very much like a major pair. When we look at the, when we look a little closer at the British pound US dollar, clearly we do actually have a buy signal from VantagePoint. So, a lot of the market pundits, analysts saying, they're calling for 115, 118 on the British pound. VantagePoint is saying it's actually going higher. Once again, a very unique call from this software, completely disregarding what the major analysts say. And we look at our predicted short, medium, and long-term differences, our predicted MACD, predicted RSI. Very nice move. Next week here, guys, this is the level we want to watch here, 124.04. The level of support starts at 125.26 and goes down all the way to 124.04. I'll just clear that so everybody can see this. This critical 18-day predicted EMA is now acting as support. Okay, I can draw a trend line in here. The trend line is going to come in there. Whoop, not a very good one there. I'll use VantagePoint software to draw that trend line, but we can see that that's going to come in right now, basically right around this area here. So our trend line basically at almost the same level as the key VantagePoint level at 124.04. We would be buyers down to this level. If we lose this level, then and only then do we look to sell Great Britain US. Right now, buying dips on a dip, next week is by far the better play, and that's fully supported by the VantagePoint indicators. As is dollar yen. Now, my concern here, guys, is what I've talked about repeatedly. I probably sound like a broken record. I apologize for that over the last several months, but we always have a range, and a lot of times basic conventional indicators, Bollinger Bands, there's so many different indicators. Then we have Elliott waves, Fibonacci. Throw all this nonsense out the window, guys. We look at it basically identifying a range high and a range low. We are at a range top right now, which I've talked about for months, and that is based off a major, significant, fundamental event, which was the Brexit. They're saying that this election was worse than Brexit. Well, that's not true. It's actually considerably more positive than Brexit. And even as I've said, Brexit is actually a good thing for the UK. It's not a bad thing in my respectful opinion. So when we look at this, we need to clear 107.41 here, guys. We are well supported at the VantagePoint 18-day predicted EMA. We are buyers down to this 104.71 area. Our support starts at 106.23. We've closed at 106.66. We're above all three of these key VantagePoint levels, but we must clear 107.41. When we do, if and when we clear 107.41, we want to be on this train when it leaves the station here, guys, because this thing will probably run up to 110, 112 very, very quickly, because this represents the final line of defense for the yen bulls and the dollar bears. So if they decide to pull out here and close out their short positions and dump the trade, dollar yen will accelerate very, very quickly to the 110 area, maybe even higher. So keep that in mind. We are definitely would be on the buy side of this. Our indicators from VantagePoint are still telling us that we're probably going to go higher, but a corrective move first would be perfectly normal. So I make sure you're watching these levels between 106.23 and 104.71. As long as we hold 104.71, we go higher. Now, with the US CAD here, obviously the Canadian dollar, it was kind of funny here because I actually reside in Canada, and somebody here in Canada said to me, oh my God, the Canadian dollar, it's because of Trump, the Canadian dollar is so bad. And I had to laugh when somebody said that to me. And I said, the Canadian dollar, we lose with these short-term risk events that we have, like Brexit and this US election. The US-Canadian pair 1 year ago, again, the Canadian dollar has lost 30% of its value over the last 4 or 5 years. So this has nothing to do with Trump's victory. If anything, they should be blaming it on Obama, but it's not his fault either. It's the Canadian economy is based around oil, guys. Oil is lower. That is why the Canadian dollar is weaker. Commodities are down across the board. This has nothing to do with your Obamas, your Trumps. Forget that nonsense here, guys. Okay, look, we have to stick to what we know. The Canadian economy has basically put its eggs in one basket. Oil. Well, when oil went down, it hurt the Canadian economy and it killed the Canadian dollar. That's what happened. So if we can get a recovery in oil, then the Canadian dollar will likely recover. The Canadian dollar could recover anyway based on, what's going on with the US. But now Trump is saying he wants to redo NAFTA. I don't know what kind of effect that will have on the Canadian dollar or the Canadian economy. And our Prime Minister, Trudeau, has already extended the olive branch that he's willing to talk about adjustments to NAFTA. Once again, we have two very inexperienced politicians, Trudeau and Trump. I believe that was probably a mistake to extend that olive branch and start opening up discussions on NAFTA. I believe that's Trump's responsibility to do that. But Canadians are very friendly, nice people, and they're extending that olive branch, and maybe something good will come of it, but we'll have to see. But for now, 133.65 here, guys. This is the area we really want to watch. This area here, 133.65. Buyers down to this level, as again, oil may correct higher, but it will probably stall out around the $47 a barrel mark. So when it does, then we would look to come back in and buy U.S. Canada. So I would look for a retracement. We've closed 135.39. I would look for some kind of retracement down to at least the 134.28 area where we can start to look to buy again, but be careful of this one. Trump could be a big positive for the Canadian dollar. So it could be Trump could be very positive for Canada in general. So we'll see how this one plays out. But again, right now the Canadian dollar very, very weak, and we still do not have a signal here from VantagePoint to sell this. Our predicted short, medium, and long-term differences all going higher. Predicted MACD crossing the trigger back to the upside. Predicted RSI 76.6. Nothing has changed here, guys. The Canadian dollar for now remains very weak. As does the Aussie. As the Aussie and New Zealand, these two currencies are very similar to the CAD dollar. We can see that Brexit high point that I've been talking about for so many months here. Again, I apologize for sounding like a broken record, but everybody seems to have abandoned the Brexit based around this election. The Brexit swing high and swing low off this single bar, they have dominated many, many markets for many, many months. And it's not something we should take lightly. We can see that once again, we are failing at that level. 76.26 is the key VantagePoint level for next week. As long as we hold below that, then Aussie US very well could be moving back into the 73 area. I'm looking for something from VantagePoint here so I can potentially buy Aussie US. I just don't have it here, guys. We've got a crossover in the predicted MACD at the 0 line. Predicted RSI 25.2. We are getting oversold. Maybe that will see a bounce. But again, this is not the type of market we want to be playing an overbought and oversold signal. Very, very dangerous. Do not try and fight the market, guys, especially going into year end. And the same thing applies for New Zealand. New Zealand, however, in my respectful opinion, is the stronger between the Aussie and the New Zealand. The New Zealand is clearly the stronger currency. But even it is taking a hit. We've slipped back below that Brexit high point at 73. Our key VantagePoint level 72.31. And once again, our predicted short, medium, and long-term differences have turned and moved into free fall along with the predicted MACD. But you'll notice the predicted RSI at 31.2. This is actually just starting. So if we're looking to short something because New Zealand's been the stronger one, shorting this pair would probably be better than Aussie US because it hasn't made as big of a move to the downside and it's nowhere near as oversold as what Aussie US is.